And Dave is the with Cityside Ventures, which has many offshoots, including what Birmingham Ventures, and I don't know if you're still doing Great Lakes Ventures or not. Are you still doing that? Great Lakes Angels, I mean.
Yeah, right. Let me get back on here. Somehow I lost the video. Here we go. Yeah, Great Lakes Angels is now a fund. It's been converted to be a $10 million early stage fund.
Okay.
And we have started Birmingham Angels in fall of 2019. So between the two entities, Birmingham Angels and the fund, which started making investments last December, we've done about 42 deals.
Wow.
And 8 of those were fund deals, and we're continuing to do more deals in the fund as more money rolls into the fund. We're not at 10 million yet, but we're getting closer.
Uh-oh.
Um,
I better get my deal into you before you run out of money, right? So
Not there yet.
oh,
We're good
okay,
for a while.
good to know. And then
Yeah,
Cityside Ventures is sort of the umbrella group, I guess, because I know I keep
yeah,
getting
it's a
invited
managing
to
entity,
events, but
right? We
but
manage both those entities. Yeah.
all right. So let's talk about that. I'll start it off here. Matt has the questions too, but you got a dozen active angel groups around the state, which is not bad for Michigan because when I came here in the 1990s from the West Coast, and Mr. Matt was over at Crane's. I don't think there was any angel groups, was there? I mean, you're one of the first, right?
No,
Yeah,
no,
I think David's was the first, the
yeah,
one that used to meet at the country club.
yeah.
Oh
The
yeah, I remember that. Yeah, right.
people
So
were doing deals, but there was not a formal group.
Yeah.
Pockets of people doing deals all around the state, but no one was formalized, which was a frustration for entrepreneurs trying to find out how do you find these darn folks that write the checks when the VCs say you're too early. So that's one of the things that was big help was to have a website where people could find angel investors and entrepreneurs could find deals that were screened for them.
Matthew.
All right. So tell me a little bit about where these groups are, the 12 angel groups around the state. Are they pretty much primarily local, or would one group in one place invest in another geographic region?
Probably 75% of them are below Traverse City.
Mhm.
Okay. There's Traverse City, and then there's reactivation of a group up, I think, in Marquette. Kind of
Okay.
died for a while. They're trying to get a restart there. The rest of them are scattered around, from Grand Rapids, Kalamazoo, Lansing, a couple of groups here in Detroit and Flint,
Ann Arbor.
Ann Arbor.
And
Oh, I
the
almost
investors,
forgot that little city.
are investing in more diverse founders than ever before. Talk about that a little bit if you could.
Yeah, that was a stat I pulled from the Angel Capital Association. By the way, I'd like to plug that for anybody listening at this. It's a great resource, angelcapitalassociation.org, for both entrepreneurs and for investors. Has a lot of information there. Entrepreneurs can find angel groups anywhere in the country geographically that they want to send their deal to. But first you want to make sure they're doing your kind of deals. You're not sending a life science deal to a group that only does SaaS, it's check them out just like you check out VCs. That's a great resource for everybody. Yeah, I pulled a stat there. They're saying that more deals are getting to be more diverse. Now, I'm not sure if that's because I don't think people are necessarily looking to diversify, but I think more of those deals are perking through to get to be funded, which is great. There's more folks in the female and in the different ethnic groups that are getting started and getting enough momentum to be seen and get funded by angels. Most of us don't really care was
Hmm.
male, what religion, what nationality. We were really looking for the best deal for our investors. And it's good to see more coming in there. So it's a lot more diverse capital going out.
Let's kind of define the different levels. I mean, I'm pretty familiar with it because I've been working with you guys for a long time. But the most of the like my startup, which I won't go into details on at this point because we're still following Dave's instructions about all the things we need to do.
Yeah.
But for instance, that's really friends and family round. That's where we think you got a good idea. We'll throw a few bucks at you. But then the next step up is angel investing, and that's more in the 200, 300 range, right, Dave?
Yeah, angels normally play in a space between like 250 to 2 million, 2,500,000. It's kind of the range that we like for our deals. We don't like any deal comes to us $4 or $5 million. We're not going to touch it. We'd rather be in a smaller deal and have more opportunity for the upside in the company than a larger deal. The larger the deal, the tougher it is for an angel to make sure it gets fully funded. You don't want to be in a deal that's so large that you're in with 250 or even 500, and it's going to take them 9 months to close the deal or longer. You want them to be using the money to execute, not using your money to go raise more money. So we don't like real large deals unless we know it's already partially filled. I mean, if somebody comes with a $5 million deal and they got $1 million left, and depending who's in it, we'll take a look at it. But at the front end of it, no.
And of
So-
course, then venture capitalists then take it from that point, 2 million on up to mega
Not
millions,
necessarily.
right?
Sometimes the next round, bridge round or seed round, can be 5 million or more. But you got some of the same players coming back in again. There's some of the angel groups, like Grand Rapids has a fund over there that's doing later stage funding. It would be a seed round of $5 or more $1 million. And as we get more money in our company, it's fun. We can look at larger deals later too. But right now, it's harder to shop for a larger deal. And they don't necessarily have to go to VCs. If enough angel groups get together, they can take a deal. We prefer keeping, if it doesn't need VC money at all, keeping it all within the angel community. Unlike VCs, we're not after major equity positions and board seats and taking over the company. Oftentimes, unfortunately, the number of rounds that VCs have to do and the amount of money they put in, end up having majority of the board seats, which is control, and major equity in the company, which really dilutes the founders and all the investors. So it's not a bad thing if the pie is that huge, but we'd rather not pay in those bigger pies.
So define pre-seed funding for me and tell us why it's so competitive to get that.
Yeah, right now, as you saw, one of the notes I made is that there's a change in the marketplace, which is driven by a couple of different things. Investors are looking at well-developed companies and ideas with sound founders to give them the confidence they want to move ahead. And it's getting more competitive because there's no problem for deal flow. There's a lot of deals on the market right now. So you might have a tier one deal that's really a sweet deal, should attract a lot of people, but there could be 10 other deals just as strong. And that's where the competitiveness comes in. There's so many really strong deals that you may not make the cut on this round. You might go to the next round and get passed. And you're going, what the hell? My deal's really good deal. Why are they taking a pass on this? Well, it might be the wrong group that's got so many good deals that you don't fit the best criteria of the best in that group. And maybe another group doesn't have the same number of deals that are that strong that you can move ahead with them. So it doesn't mean your deal's bad or weak. It means you got into a space with that group where it's really competitive and you didn't make the cut, at least for that round. And there is a trend. I think I sent something where too that early stage venture funding, which is all ventures, angel and VC funding, saw a decline in quarter over quarter last year. But at the same time, 65% angel groups believe that company investments will be about the same this year as they were last year. So what that is telling me is that the number of deals are increasing, but the amount per deal may be less. So they're deploying the same amount of capital, but to cover themselves, they're doing more deals and dabbling a little bit more, a little lower amounts in the deals to be more diversified with their risk.
So would a sweet spot be around 250,000, 300,000 in that ballpark then in a scenario like that?
As far as the investment goes, or the raise?
Yeah, I mean, if you're saying they're investing less money, then they're going for more deals with less money in the
Yeah.
deal. So would 250,000-ish in that ballpark be
That-
more favorable?
It depends on the group. It might be only 100, 150K is what they'll put into that company for that round. So they want to do more deals, keeping below 200, per deal type of thing, so they can be in a lot more deals.
Hmm.
At the same time, you have angels, especially in our group, we want them to understand that to get a win, you need to be in a lot of deals. You need to be in 14, 15 deals at least to make sure you've got one winner or more that makes it up for the ones that don't make it. So you really don't want to start out in angel investing thinking I'm going to do 2 deals a year. It'll take you, 6 years before you have enough critical mass deals to feel comfortable that you've got to win, because it's not one-to-one. You make an investment and you get a win. It's spread out over a lot of companies, and some of them take a long time to percolate to go to market. So you need to be in a number of deals. So, and depending on how much money you deploy, maybe that's all you can do. It's risky. We find some folks that are passive investors don't have time to look at deals, find the attraction in a fund like Great Lakes Angels Fund is very good, because you don't have to pick the deal like a VC fund. The funds deals are picked for you, and you're in every deal. In our case, we expect to have 40 to 50 deals over the life of the fund, which means if you look at VC averages, 1 out of 10, that's 4 or 5 wins out of that many deals with one single investment in the fund. So that's always a nice side to play.
Well, Matt's getting ready to retire. That sounds like something for him then, right, Matt?
Yeah,
You're
Sure,
worth $1
credit
million
investor.
bucks, right? Come on. So
We like more accredited investors to join. They have to be. We don't like to take money from unaccredited investors because it's too risky for them.
Yeah.
But Matt, I'm sure probably is there by now.
he's a gazillionaire. He just keeps it under his, quiet,
Yeah.
But
We're
the
actually
relatives don't
finding
come for
some
his
of
Well,
the-
it's
money,
that,
right?
it's that Midwestern, don't flaunt your wealth thing, from the
Oh,
west side of the
That's right.
state. So
That's
He's
right.
got a
Don't
palace
wear
in
it on your
Dearborn.
sleeves.
Don't let him kid you, so.
We're surprised how many of our investors don't know that they have an asset that's been illiquid that they could deploy and make angel investing with, such as a 401k or their self-directed IRA. There you go. And they're going south right now. They're not doing well. If they take money out of those two, either one of those investments, they can legitimately invest in like the fund or a company. And when there's a return, assuming there is a return, put it back into that same entity and not pay taxes on it till much later when they take the capital out. Some people go, oh my God, I'm sitting on, $500,000 in my IRA. I could put that in the fund for hopefully 3 or 5x money and bring it back over with all our profits and never pay taxes on it. Show me the briar patch,
That's it. Where do I sign up, right? So
Yeah.
Well, in fact, where do people sign up, since we're at the end of the segment now? If people want more information about all this.
CitySideVentures.com or D Weaver at CitySideVentures.com.